Hello and welcome to our latest Academies update. Firstly, I'd like to thank you all for joining us in such strange times. I hope you and your families are fit, healthy and well. My name is Darren O'Connor and I am one of the partners here at James Cooper Creston. I am also the head of our Academies team. I am delighted to be joined by Louise Hallsworth today and also by Lizzie, who will be helping us run through the slides and will answer any questions you may have. I'll hand over to Louise for a brief introduction.
Thank you, Darren. My name is Louise Hallsworth and I'm the audit partner for James Cooper Creston in Southampton, and I've been involved with Academy since 2010, so have seen a fair few changes over that period of time, and I'll be starting in a moment once Darren has obviously finished the introduction.
Thank you very much. So we have a series of slides that we will run through here today, which will broadly cover off the changes to the Academy's Financial Handbook 2020 and the Academy's Accounts Direction 1920. Both have recently been released and we'll talk you through the changes. Any questions you may have, please do feel free to enter those and we will do our best to answer all questions. Any that we do not have time to get to, we will of course come back to you in due course. Thank you very much, and I'll now hand over to Louise.
Thank you, Darren. Well, the first part of today's webinar is actually looking at the updates to the Academy's Financial Handbook. But before we actually start looking at those updates, it's always important to remind ourselves of the purpose of the AFH. And fundamentally, the Academy's Financial Handbook sets out the financial framework that academies have to follow, and it provides the financial management and principles for academies rather than the detailed guidance which will be found in the Academy's Accounts Direction, which Darren will look at later. I always think about the AFH as being sort of the skeleton and the AAD as being the meat on the bones, which gives you all the differences. So most academies should have their skeletons the same. They may be slightly different, but they should all have the same factors. Whereas when it comes to the detail, academies can vary significantly depending upon their individual situations. The AFH update is always published in June by the ESFA, and it's meant to be used by members, trustees and local governors, Academy accounting officers, chief financial officers and clerks to the boards, as well as us as the Academy auditors. It's effective from September 2020 onwards, and it's one of the musts for all academies. It has to be complied with. So it's very important that we're aware of the AFH. Now, each year the Minister for Schools always adds a foreword to the AFH. Now, this year we've got Baroness Berridge, who's appointed in February 2020, replacing Lord Agnew. And her comments were as follows: the importance of financial management and the setting of principles for efficient financial management within an academy is crucial, in her opinion, for academies to succeed. She also mentions the continuing importance of internal scrutiny. Now, that's a hot topic that's been around for a few years and we'll look at in detail in a few moments. And new this year is the mention and the stressing of the importance of good reporting to aid informed decision making within academies. So that's not the external accounts, that's reporting internally, so trustees are aware and can take responsibilities of the academy's progress. Then there's a reminder by the Baroness of the resources and publications that are obviously available to academies, and there's a big list of the different fact sheets that are available. And finally, she says that Academy trusts have led the way with accountability and transparency, a very positive final statement. And all of this is achieved by adhering to the rules that are contained within the AFH. So what do we need to be aware of in the 2020 AFH? Well, the good news is that the 6 sections remain unchanged from 2019, split into the 6 sections that we've got on the screen in front of us. I'm not going to go through them, the titles haven't changed, some of the details have, which is what we need to look at today. So 2 aspects to consider in the handbook. The musts, which are the requirements that have to be adhered to by all academies, well, to make life easy, they are now listed in Part 8 of the AFH. So a really easy place to go to just check that you have adhered to the musts without obviously having to go through each single section. We've also then got the shoulds, which identifies the minimum good practice. Now, the shoulds should be adhered to, but they're not must. You don't have to if there is a better alternative approach that suits your particular academy. So obviously just remember the musts and the shoulds, which are pretty fundamental to the AFH. So what changes have we got in 2020? These are separated into 5 sections this year, and we're going to start by looking at the changes to governance. And governance has become an expanding area within academies, and the responsibilities of governance seems to never stop expanding. And first of all, we're told that trustees now must take ownership of the trust's financial sustainability to operate as a going concern. Now, the AFH 2020 was obviously written pre-COVID, and COVID has created issues around going concern for businesses. Less so, I'm pleased to say, for academies, but it is still something that the trustees need to consider regularly to make sure they have got a going concern. There's also some clarity over members saying that they must not be employees of the trust. And it includes unpaid voluntary roles. You can't be a member and be involved as an employee or on an unpaid voluntary role. The members must also be informed about the trust business. Now that goes back to what the Baroness said in her opening statement. It's really important for the trustees to be assessing the financial position of the academy and being able to make informed decisions on information that's valid and reliable on a regular basis. So the members must be informed, otherwise they can't make those decisions. A clerk now must be appointed to the board. It's now a requirement. And finally, the register of interests must be kept up to date. So the must that we need to be aware about the governance that's changed in the AFH. Now, the second area that we need to consider, the changes, are to the executive team. Now, these are quite small, luckily, no fundamental changes. It just says that the accounting officer and chief financial officer should be employees. Now, we have to question, should quite regularly become musts in the subsequent AFH, but at the moment it does just say should. And after the 1st of September, if you're going to actually appoint someone who isn't, you do need to get ESFA approval before you make that appointment. And for larger trusts with over 3,000 pupils, usually given as an example for a large trust, you are encouraged to have qualified CFOs. Now, there's a list of examples of financial qualifications that they would expect to see for a CFO. So just be aware of the executive teams and the things that the AFH are looking at you incorporating into your academy structure. Next, we're going to look at the general controls and transparency, and these are fairly general updates. There's nothing too shocking here, but the must to start with is to maintain a fixed asset register. And again, fixed asset registers have been shoulds, but they are now a must. It has to be maintained by the school. It's not sufficient for the auditor at the year end to go in and obviously update the asset additions, depreciation, etc. It's now down to the academy itself to make sure that it has a fixed asset register that is maintained. Bank accounts must not go overdrawn. So you need to make sure that your bank accounts do not go overdrawn. Trusts must not spend funds on alcohol for consumption unless it's for a religious service. And again, this is a big area of debate, and it has been an area of debate for the last couple of years. And I'm sure we're going to see more on this in the future. The number of employees whose benefits exceed 100,000 must now be published on the website. So you have to actually work out, and that's not salary, that is obviously the total package to your employees. Anyone that exceeds over 100,000, we've got to work out how many that equals and put that on your website. An academy must complete the school's resource management self-assessment tool. And finally, the procedures for whistleblowing must now be published on the website as well. Now, all of these changes really just add to increased transparency of academies. Stakeholders can see on websites, they can see the information now with ease. So the fourth area is internal scrutiny. Now, this is an area which has been mentioned previously, and it has been expanded in the 2020 AFH edition to include financial and non-financial controls. So when you're looking at your internal assurance reviews, it's not sufficient anymore just to look at the financial controls. So you have a much broader spectrum of areas to consider. There's also been a separation of the external auditor being able to provide internal assurance reviews for their clients. So there must be a separation between your external audit and effectively your internal audit. They can't be performed by the same people after the 1st of September 2020. And finally, the internal assurance reporting, which we know this year is a must to the ESFA, we now know it must include the areas reviewed, the key findings, recommendations and conclusions. To date, there is no standard format for this report. I'm sure that's going to evolve as we all continue, or we all start to make these reports. So a standard template may become available, but at the moment, we just know what we need to include in those reports that have to be with the ESFA by the 31st of December 2020. And the final area of change for 2020 is extending the role of the Audit and Risk Committee. Now, again, this is an area that we know has been looked at in the past, but we've now extended this to say that the Audit and Risk Committee must review the external auditor's plans each year. Now, usually that will be achieved by the planning meeting with the auditors and obviously the Academy Trust itself. It also has extended it to say that the Audit and Risk Committee must review the annual report and accounts. And again, this goes back to Baroness Berridge's comments about informed information. Trustees need to have that information to be able to make their decisions. They also must review the auditor's findings and any actions taken, i.e. management letter points, any weaknesses in controls, any recommendations. They need to make sure that they are all being addressed. And finally, we've got to assess the effectiveness and resources of the external auditor. So it's really important that academies are looking to see that their auditors are fit for purpose. So if you've become a fairly significant match, so the situation has changed maybe from when you first converted, if you're using a very small auditor that hasn't got the staff or the technology, you need to make sure you can address it to guarantee that you are getting the service that the MAP requires before you reappoint, dismiss or retender, or those auditors retender for that audit work. And it's not sufficient just to actually undertake that review each year. You actually have to produce an annual report now, the Audit and Risk Committee, their conclusions, and advise the board on your decisions. So I said, whether it's reappointment, dismissal or the retendering process, you need to support that with an annual report. So in summary, what have the updates in 2020 really covered? It's really clarification rather than any substantial changes. That's the good news. We know that members, trustees, accounting officers, etc. need to be looking at this handbook, and it reiterates people that should be looking at the handbook. It's effective from September 2020 onwards as usual, and it's obviously crucial to make sure you review the list of musts in that handbook, because it will lead to qualifications if you have any breaches in your assurance report. I'm now going to hand over to Darren, who's actually going to look at the Academy's Accounts Direction update. Thank you.
Thank you, Louise. So the Accounts Direction 1920 was recently released, and just to remind people, it covers the year end or period ended 31st of August 2020, that set of accounts. It covers off all the details you need and what is required within your financial statements. It's it's been developed over a number of years and is a mixture of various legislation and guidance that's been released over that time. As it falls under company and charity law, it is governed by both the Companies Act and the Charity SORP, as well as various other documents and requirements. That does lead sometimes to some repetition within the notes, as some assets, liabilities, expenditure, etc., are disclosed slightly differently under Company Act rules and charity rules. This year, it's fair to say that there are a few additional disclosures and some minor changes in guidance, but overall fewer changes than what we've seen in previous years, and certainly going back 3 or 4 years ago when there was wholesale changes. From my point of view, the next time we're likely to see significant and wholesale changes will be when there is a new charity SORP, which may be a couple of years off yet. Moving to the next slide. The changes to the accounts direction. First of all, let's cover off the trustees report. There's a few additional statutory elements to be included this year, and some are dependent on the size of the trust. And in a moment, we'll go into what a large trust actually means from this point of view. So firstly there, to include a section on promoting the success of a company. So this will be a new paragraph or two added into the trustees report, where you'll cover off how the trust has promoted good business conduct, how it's made decisions for the long-term good of the trust. It's likely to overlap with some of the other sections below and business activities and so on, which you were used to and you regularly see within a trustees report. So there will be some overlap. Moving to the second bullet point there, employee engagement. This section is only required if you have more than 250 employees at the trust. So what would we expect to see in this section? I mean, it would include a summary of how the trust has engaged with its employees, how it's consulted with the employees on important issues, and how they have encouraged employees to be involved in the company's performance and long-term success of the trust. Business relationships, again, a new section added, and this is only for large companies. Again, we'll come on to what large companies actually mean in a moment. But in this section, I would expect trust to cover off relationships with suppliers and customers and wider stakeholders. How you build and maintain those relationships and any of the positives and perhaps negatives that come out of those relationships. Lastly, the streamlined energy and carbon reporting requirement, as most people call it SECR. This is a requirement again for only large trusts and also trusts that consume more than 40,000 kilowatts of energy in a year. So both of those requirements need to be met. There is a requirement here to voluntarily disclose, sorry, there's no requirement, but it's encouraged to voluntarily disclose, but it's mandatory for any trust that meet those two conditions, i.e. they're a large trust and 40,000 kilowatts of energy in any reporting period. Next slide, please. So as I said, let's recap on what a large trust really means. So this is driven from the Companies Act and company guidance. So here we talk very much about companies, but it's relevant to all trusts here. So you need to meet 2 of the following conditions and for 2 consecutive years. So the conditions are annual income of more than 36 million, balance sheet total of 18 million, and average employees of in excess of 250. Just picking up on the balance sheet total there, just a reminder that that is not your net assets, but it's your total assets. So your fixed assets and your current assets added together. So bear that in mind when you are considering whether you need to comply with the relevant additional disclosures. And also on the annual income side, annual income within Academy Trusts will vary year on year. For example, if you were to take on a new school from the local authority, there's likely to be a large inherited donation of land and buildings, pensions, and so on. So there could be a lumpy income stream, which would need to be taken into account here. But do remember, you have the 2-year rule. You must meet these conditions for 2 years. I suppose it's important to note that the requirements here, if met, you must include the disclosures that are on the previous page, but you can always voluntarily disclose and include those sections within your trustees report, regardless of the size of the trust. Over to the next slide, please. So a little bit more information on the SECR disclosure. What do you need to disclose? So trusts will need to report on the gas, purchase electricity and transport fuel within the period. Reporting will need to include the following as a bare minimum: energy usage and emissions, an emission intensity ratio, methodologies for how you've calculated it and any measures taken. There is a number of pages of guidance within the accounts direction which covers off some of these terminologies and how they can be calculated. There is also some illustrative examples within the accounts direction and reference to good practice guides and other documents that help you calculate some of these items. So I would encourage you to review that. Next slide, please. So moving on to other changes within the accounts direction. The accounts direction makes it clear that going forward, any irregular activities, impropriety or anything that does affect your regularity report should include a monetary value if possible within the regularity audit report. The Academy's trusts also need to include how the changes to the FRC ethical standards have impacted the trust, and you would normally see that disclosed within the governance statement. That may include any steps that you have taken or are about to take to remain in line with the ethical standards going forward. So here we're alluding to what was mentioned earlier by Louise, the separation of internal audit or assurance and external audit. There is also an encouragement to state whether you have complied as a trust with the governance handbook and the framework. It's important to note that it's not mandatory for trusts to comply with these, but if you have, I would suggest you do disclose that you have complied with the handbook and the framework. Next page, please. Going concern, there have been some changes within the accounts direction in relation to a going concern. It's more about reminding trustees that the onus is on them and the board to ensure that the trust remains a going concern, and if not, to highlight and flag that. Trustees should take a robust stance here and should be considering financial forecasts, longer term sustainability, looking at pupil numbers and other wider factors, and challenging the financial information to ensure that the trust does remain a going concern. Next page, please. Other disclosure changes, these are fairly minor, but I think it's useful to raise. Legal costs now need to be separated out and disclosed separately within the notes to the financial statements. The teachers' pension scheme disclosure, the long note towards the back of the set of accounts, has been updated for the latest actuarial valuations and contribution rates and so on. So that will change this year. And there was a new note within the cash flow statement to summarise the net debt position, which will include the Salex loans and so on. Again, I don't think these are fundamental changes to the accounts. Next page, please. I thought it would be wrong to carry out a webinar or present a webinar without touching on COVID-19. The accounts direction makes very little comment or reference to the pandemic, but I think given that we're moving into academy season in terms of preparing and finalising accounts, I think we all do need to have COVID-19 on our radar. So where would it affect your financial statements? Well, firstly, going concern, we've already mentioned that as part of any audit, we would be considering whether the trust will remain a going concern, financially viable for the 12 months after signing the accounts. So that will include looking at financial reports, perhaps some sensitivity analysis on some of the assumptions to ensure that the trust does have the financial means and has taken the necessary steps to ensure that they remain a viable trust going forward. Now, within the trustees report, we would usually expect a section to be added which discloses how the trust has been impacted by the pandemic and any steps and measures that have been taken or will be taken in the future. We will also, from an accounting point of view, need to look at the assets and liabilities to see whether there are any assets that are impaired or have changed in value as a result of COVID-19, and likewise any liabilities, any new liabilities that may have occurred as a result of COVID-19. We don't envisage there being many, but that is something we would need to look at as a result of our audit or as part of our audit. Moving on to the next page, please. So publications, I suppose as a roundup, we've covered off the first two, and they're clearly the important documents that academies must adhere to and follow. There are other sources of information, which I'm sure you're all aware of, but is worth raising again. The ISFA have recently updated their good practice guides, and there is some useful information in there. I have referred to one of their documents earlier in relation to the SECR. There are also the Academy Trust Dear Accounting letters, which are very important and should be tabled and discussed at board meetings regularly, and investigation reports and other various reports that are released by the ESFA. Moving on to the next page, deadlines, or as I put it here, current deadlines. There have been some discussions around whether deadlines will move this year. Many of you will be aware that in the corporate arena, lots of limited companies have had extensions, or all now have had extensions to their filing deadlines. Whether or not that will be extended to the academy sector is unknown at this stage, but it is something that we know is under discussion and may be released. More information may be released later. As a firm, James Cooper Creston are working on the basis that these are the deadlines, and we have put steps in place to ensure that we can meet them, and we're very confident that we can. So the financial statements, 31st of December, will be no surprise and is in line with previous years. The accounts return, slightly vague there. We haven't got an exact date in January. Working on similar figures to last year, we'd expect it to be around the 18th of January, although to the best of my knowledge, that has not yet been released. And the submission to Companies House at the moment would be 31st of May. As I say, Companies House have extended their deadlines for companies that, for year ends that have passed or we have already passed. So we may find that that deadline gets pushed out, but for now we should all work to that deadline and we should comfortably be able to file on that basis. Next page, please. So we move to the end of our slide deck for today. I've included both of our lovely pictures, or in Louise's case, lovely picture, and some useful links that you may find helpful in the future. We'll now move to any questions that may have been raised, and as I say, we can, if we don't have time, we can always pick them up later. And please do send any email, any questions you may have to us personally, if you would prefer. Lizzie, would you mind having a look through the questions that have been raised?
Hi Darren, yes, thanks for that. We have had two questions today, which I hope one of you will be able to cover. And the first one is, do you think there is an expectation for smaller academies to disclose and report on SECR?
Louise, are you happy for me to take that one?
Absolutely, Darren.
Okay. The guidance suggests that it's required for larger trusts, and we went through the limits, but there does seem to be a recurring theme that academies are encouraged to disclose where possible. Particularly if you're close to the limits, my personal recommendation would be to disclose on the basis that you wouldn't need year on year to check whether you are currently within the disclosure requirements or not. I think it's a useful exercise for academies to carry out and probably should be benchmarking anyway. So if the information is available, I don't see any downside to including it within your accounts. So hopefully that answers the question.
Thank you, Darren. And the second question is, do you think the filing deadline will be extended from the 31st of December?
Shall I take that one, Darren, seeing as I know you covered it in your part of the session, but I can just maybe add a bit to it?
Yeah, yes, please. Happy to hear your view on it.
No problem. As Darren said, at this point in time, it hasn't actually been extended. And whereas normal companies have had their year ends extended by 3 months, I don't think it will be extended. There is obviously a bit of lobbying to get that extended, but at the moment there is no decision that has been made. I think the SFA are monitoring the situation to see how it all sort of pans out. But with schools going back in September, I think it's sort of business as usual, whatever the new normal business will be. So personally, I don't think it will be extended. I don't know that. And we will obviously update all of you as soon as we hear anything that may be to the contrary. Thank you.
Thank you, Louise. Brilliant. Well, I think that concludes our webinar today. As I have said, please do get in contact with either Louise or myself, or your regular contact at James Cooper Creston if you do have any further queries or questions. So I think that just leaves me to thank you all for attending today and taking time out of your busy schedule. Please do take care, look after yourselves, and I hope to see you all soon. Thank you.
Thank you.
Bye.